So that's the first tick for you. It's quiet actually, but with a bit of a green hue. So the Nifty is up about 35 odd points, a 54-point uptick on the Nifty.
Got a green screen and at about what, 17,100 at this point in time. Market will end pretty much at the day's high. 17,142 is the day's high, and we're about 12 points short of it. The low yesterday and today is the same, but we've only managed to recover about 50% of yesterday's losses.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Bulls reclaim some lost ground on the Wall Street even as stocks struggle for traction across Asia. Sensex gains nearly 500 points, Nifty back above 17,000. Government announces a one-time compensation for oil marketing companies to bridge the losses they are incurring on LPG. The outlay for the scheme is at 22,000 crore rupees. Girish Tanti, Vice Chairman of Suzlon Energy, tells CNBC-TV18 that after deliberations, the promoters have committed to running the business and they will not sell out. Wipro largely meets expectations in the second quarter. Revenue grows at over 4% and margins cross 15%. But the company expects growth in quarter 3 to be modest. HCL Tech also meets expectations and raises its growth guidance for the full year. Oil prices declined for the third day, but Brent crude continues to hover around $95 a barrel. US President Joe Biden says there will be consequences for Saudi Arabia after it sided with Russia to cut oil production. Well, here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Andrew Holland, the Chief Executive Officer of Avendus Alternate Strategies. And in Big Corporate Voices, we have Girish Tanti, the Executive Vice Chairman of Suzlon Energy, echoing the views of promoters and the management to stay committed to their business. But of course, the big news has been that the Wall Street surged in the second half of trade to end at the day's high. Financials led from the front with Nifty and Sensex closing 1% higher. Prashant Nair is here with all the day's trading action. Prashant?
The market doing just fine today, recouping about 50% of what it lost yesterday, and holding on to the lows from yesterday, which is a good thing, bodes well. The sectors which did well, banks, I mean, they come back into rotation, but it was a broad-based kind of a move. So banks, both public and private, did well. Real estate names which lost heavily yesterday, FMCG did well, and energy stocks did quite okay. Even IT, which was a bit of a disappointment yesterday, was more up than down if you look at the breadth of stocks there. Old economy names on the Nifty, Power Grid, Coal India, NTPC participated on the upside. Financial names like IndusInd Bank was there. Axis Bank continues. I mean, it's been having a good week so far. Bajaj Auto, Tata Consumer were some of the others. Overall market breadth was about 1:1. But, the momentum was with the stocks on the winning side. Just volume-led gains, much longer list on the winning side and then the losing side. Defense names have done well. Mazgaon was down 7 but recouped most of the losses today. Garden Reach Shipbuilders has had a stealth move and has re-rated after what Mazgaon has done. Even Kochi Shipyard participated nicely. The IDFC twins, both IDFC First Bank and IDFC participated. Raymond, KPIT Tech, a bunch of other names. Gold Financier like Manappuram did well. And Mahindra & Mahindra Finance was another one which did just fine. As I said, the market has done better than most global markets, even on a day-on-day basis, and today was a case in point. So we are falling less than the global markets and rising more when the global tide turns favorable. And that's basically what we have to watch for. When does, negativity get to a bit of an extreme level and we get a bit of a relief rally in global markets, which allows the market to move higher, more aggressively and with more confidence. And I think the big pivotal data point to watch in that sense is the consumer price inflation numbers, but that is only tomorrow, which we'll have to wait and watch for.
Prashant, thank you so much for that analysis. In fact, let's get you some expert opinion now. Andrew Holland, CEO of Avendus Alternate Strategies, said that the Bank of England is dealing with huge amounts of debt, rising interest costs and lower revenue. He added that while prospects for the Indian markets look bright, the current situation seems like the lull before the storm. Listen in.
If you think about the Bank of England as a company, like with a balance sheet, it's got huge amounts of debt. And its interest costs are rising and the revenues are coming down because of global slowdown. So, there's only a couple of ways they could really change this, is that the government would have to rein in spending. But given the recent budget they had, that's going to be a difficult task for them to do so. So you get into this stagflation problem and credibility. And I think that's what's the part that's worrying me is you've seen it with a central bank saying there's problems out there. So what else is hidden under the carpet as we keep tightening? I think will come out from the corporate sector as well. So it's a financial problem I'm looking at now. Quite the kind of narrative that's going around that India's decoupled, but from an overall perspective, our prospects do look a lot brighter. So that I've not gone away from that throughout all of this year. But you can't run away from something which is financially could have an impact on global markets. And it's being played out through the currencies and bond markets at the moment. So at some point it will play through equities. I'm not saying that once that fall happens, it should be the time to get even more constructive on putting more money to work in the Indian market. But just at this point, it's like, it just feels that there's something, the lull before the storm.
In more opinion now, Dean Kim, head of global research product at William O'Neill, said that they are looking at a 6% fall on the Nasdaq at around 9,800 mark. He added that the Indian market has been very resilient. Take a look.
Nasdaq specifically, we put the market back down to downtrend today after the close as it undercut September lows. And, basically we're looking at another 6% lower in terms of the next level support at around 9,800. And that's going to take us to, 40% off high. And so I think there's a lot of volatility in the market. The Indian market, has been very resilient, and it's going to test the 200-day moving average currently at around 57,000 on the sensex. We see the next level support at 100-day moving average, which is about 1% away at 56,000. And support after that is around 55,000, only 4% away. So, but let's hope that, the market finds support at the 200-day moving average. That would be a very good sign.
Okay, that is all the market opinion for you. But moving on to the second headline now. The government has announced a one-time compensation for oil marketing companies to bridge the losses they are incurring on LPG. The outlay for the scheme is at 22,000 crore rupees. Sapna Das is here with more details on the same. Sapna?
Well, this 22,000 crores is definitely a substantive sum for the OMCs in terms of the under recovery that they made on LPG. We're given to understand that the demand had come in for 28,000 crores worth of compensation, but 22,000 odd crores is where it has settled. So far, the government is saying it's a one-time compensation, but maybe the situation on under recoveries is not completely clear. LPGs, the prices are definitely administered, and that's the reason why the under recoveries have built up. The full price pass on has not really happened in terms of the consumers. Internationally, prices have gone up by over 300%, but a very small portion of that has been passed on to consumers. So we have to wait and watch and see whether this is really going to be a one-time relief for OMCs on the LPG under recoveries, or there could be something more. Apart from this, we are also going to understand that overall the situation is not extremely bright in the sense that there are still under recoveries on diesel. So that's something that will have to be factored in terms of expectations that there could be a fuel price cut in terms of petrol and diesel very quickly. This is a sense that we are getting, but of course it's a dynamic situation, so we have to see how it really goes. But for the time being, big relief coming to the OMCs in terms of this 22,000 crores worth of relief, and this communication will be going to them very soon.
All right, the oil marketing company stocks did really well in trade today. Sapna, thank you so much for joining us with all these details. The third headline now, Suzlon Energy fell over 2% despite the company's vice chairman Girish Tanti telling CNBC-TV18 that after deliberations, the promoters are committed to running the business and they will not sell out. He added that the company was committed to repaying its debt. Vivek Iyer is here with all those details. Vivek.
Well, that's right. After the unfortunate demise of Shri Tulsi Tanti, quite a few questions in terms of, how exactly, number one, how exactly will the management transition happen? What would be the fate of the rights issue that the company recently announced? Also, there were worries about, what some of the larger investors, remember, Dilip Sanghvi holds a significant stake in the company. So quite a few questions. And also, there were some worries or, there were some expectations that the company, whether or not would continue as an entity, under the same management. So for all of these, we actually got in touch with the management. As of right now, they clarified that, number one, the management control continues to remain with the Tanti family. So 2 of his brothers have taken over the important responsibilities. In terms of the rights issue is already underway. The company is looking to raise almost 1,200 crores via the rights issue. And the management indicated that 900 crore out of this intended 1,200 crore rights issue would mainly go towards, repayment of debt. Remember, another worry for the company is the high debt burden that it carries. So the company had an EBITDA of close to 850 crore in FY 2022. So they have indicated that they are targeting a debt to equity ratio of close to 2:1. The other worry, of course, was the low shareholding as far as the promoter and promoter group is concerned, just around 14.5% stake. And, the Sanghvi family holds around 12% stake. So this was another question that we asked them. Categorically, they've said at least for the time being, no talks are underway in terms of an actual stake sale or selling out of Suzlon.
There is a very strong foundation that our Tulsibai had set for the organization, and I think we are on a very strong chart now for growing from here. And we've had internal management discussions with the leadership team, and all of us have jointly committed ourselves to driving the vision and the plans which have been charted out, and we all stay committed, both from family as well as from the management. The Sanghvi family has been a critical, important partner for us in our journey, and we have had discussions with them as part of the transition plan. And there wouldn't be any change as regards to the understanding of the relationships we have. So there's not going to be, their participation shall continue as before.
All right, okay, that's the word coming in from Suzlon's management. Some positive commentary out there, but time for a break now. Stay tuned, we'll be back in a jiffy with all the other key earnings action of the day. Hi, welcome back. Well, this is the earnings corner now. Wipro came out with its second quarter numbers post-market hours, and the firm largely met expectations, while revenue grew at over 4% and margins crossed 15%. The company expects growth in quarter 3 to be modest. Rima is joining us with the details and the analysis as well. Rima?
Thanks so much for that. So Q2 for Wipro was largely in line with expectations. No positive surprise, unlike in the case of TCS. Constant currency revenue growth at 4.1%, right within the company's guided band of 3 to 5%. Margins on expected lines have expanded by about 16 basis points to 15.1%. But the miss is really on the Q3 guidance. That's the December quarter guidance. They're just guiding for a revenue growth of about 0.5 to 2%. And this is lower than consensus expectations. Some positives in the numbers. The deal wins are fairly healthy. They've gone up by 43% in the first half of the year. Attrition has ticked down even further, so that's a positive. But I think the street could be disappointed by the guidance for the next quarter. So at a time when TCS reported a good set of earnings, HCL Tech has upgraded its revenue guidance. For Wipro, I think this revenue guidance is going to come in as a bit of a miss. So although the valuations for Wipro are relatively cheap, this unexciting guidance could keep investors on the sidelines.
So Wipro, but Rima, modest outlook from Wipro, well, that's clearly not the case with HCL Tech. What were the numbers looking like?
Well, Q2 is good, bang in line with street expectations. The company's reported a constant currency revenue growth of 3.8% in line with expectation. Margins have come in ahead of expectations. EBIT margins have expanded by 100 basis points to 18%. We were penciling in only a 40 basis points improvement in margin. Deal wins are solid. They've gone up by 16% on a quarter-on-quarter basis. And the sweetest thing in the numbers is the fact that they've raised the full year revenue guidance. The earlier revenue guidance was 12 to 14%. It now stands at 13.5 to 14.5%, which means at the lower end, the company's raised the revenue guidance by 150 basis points. And it also means that HCL Tech is going to surpass the kind of growth that it had compared to last year. So it will be one of those few IT companies where FY23 growth is going to be better than FY22. They've lowered the margin guidance. Earlier 18 to 20%, now 18 to 19%. So the bottom end of the guidance remains the same at 18%, but the upper end has been brought down. this should not disturb the street at all because one, the actual estimates on the street were closer to 18%, and two, the company themselves had guided for their margins this year will be at the lower end of the guidance, which means anyway the street was working with margins to be closer to 18 to 19%. So this decline in the upper end of the margin guidance should not cause any nervousness in the street. So all in all, it's a good set of earnings coming through from HCL Tech. Q2 margin beat, revenue guidance upgrade comes in as a positive surprise.
Okay, all right, Reema, thank you so much for joining us with that analysis. In fact, we are also joined by market expert Prakash Diwan to decode these numbers with us. Prakash, good afternoon. Thanks a lot for joining us. Well, you heard Reema, while Wipro gave a modest outlook, or the outlook in terms of their growth guidance was quite muted, but that's not the case with HCL Tech while the numbers were in line. What is your first take?
No, I think I know honestly I could catch quite a bit of what Reema ran us through because of the patchy line. But the first look at the numbers very clearly do tell us that it's very much in line, or probably even slightly better than what was expected. So from that perspective, it's kind of numbers that do give you some sort of a respite. Given that we went into earnings for this particular name with very low expectations of, a set of numbers that were expected was pretty weak.
Okay, Prakash, the line actually is very patchy, so we'll try to reconnect with you and get your take on the numbers as well. For now, Wipro inline set of numbers, the guidance is quite modest, not in line with estimates. However, HCL Tech's guidance definitely beat estimates, and that is something that the street will like tomorrow. So, of course, the reaction on these stock prices is something we'll be watching out for. But banks will start coming out with their second quarter numbers soon, and loan growth for the sector is at a multi-year high. Abhishek Kothari is here with the details. Abhishek, expecting a good quarter for banks this time.
As you mentioned, the loan growth of banking sector has been one of the best loan growth in a while. So the loan growth for the sector in Q2 FY23 was at a multi-year high of 16.44% YOY and around 4% sequentially. There has been business updates which have come in from few lenders, which shows that, private banks have gained market share on the back of strong loan growth momentum from the PSU banks, that they have gained market share. So RBI has been, raising the interest rates. So banks have also raised interest rate in Q2. So you can expect net interest margin of the banks to remain stable or improve on a sequential basis, given the fact that they have also raised interest rates. Asset quality will not be an issue. We may see improvement in asset quality with lower slippages this time around and better recovery. Large part of the slippages that may get reported will come from restructured book. Credit cost or provision for NPA divided by the advances ratio will be lower on a sequential basis, that is quarter on quarter, for majority of the players. Now, PSU banks will not see a huge reversal in the treasury losses that they had in Q1 FY23, although many had guided for the fact that 50% of the losses that they had in Q1 may get reversed in Q2. We may continue to see private banks investing in their franchise, which may keep their operating expenses on the higher side. We have some of the estimates coming in from Kotak Securities. For SBI, their estimate of NII is a 7.5% growth both YOY and quarter on quarter, while net profit they estimate a growth of 52.5% YOY and close to 92% sequentially. For SDFC Bank, Kotak Sec has an estimate of NII growth of more than 17% YOY and about 6.3% quarter on quarter, while they are expecting a profit growth of 27.5% YOY and about 22.5% sequentially. For ICICI Bank, the NII estimate is a growth of 18.7% YOY and about 5% sequentially, while profit is expected to grow more than 35% YOY and close to 8% sequentially. For Axis Bank, the NII estimate by Kotak Securities is a growth of close to 27% YOY and about 7% sequentially, while profit expectation is a growth of 46.5% YOY and more than 11% sequentially. Back to you.
Okay, all right, Abhishek, thanks a lot for joining us with that analysis. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.